Well, stocks continue to rise, and our next guest says his market indicators still favor the bulls. He's Robert Maltbie, fund manager of Millennium Asset Management. He joins us now to talk about where the market is headed and what stocks will lead. Robert, thanks so much for being with us.
My pleasure, Erin.
Well, let's start with your overall market view. Okay, I'm looking here. Your indicators are still bullish. You say a 60 to 65 score out of a possible 100, but that's down from what you called the off-the-charts bullishness of last fall. Where do you stand on the markets now?
Well, we're looking at 10 to 15% upside by year-end in the S&P. We think that although the expectation levels are high, actually right now the earnings coming out are exceeding those expectations slightly. So we think there's more room to go.
Now, you mentioned earnings, and that was some of the indicators that you look at as part of your market assessment. You said earnings and also merger and acquisition activity. We're seeing, obviously, a lot of that. Is M&A activity pointing in a positive direction for the market?
Yes, very positive. When the corporations are out with the checkbook, using cash in their own stock to make acquisitions, that's usually a good sign that there's some value left in the market. In terms of the earnings, we're seeing a high percentage of earnings come out above the bar, beating estimates, higher than normal. So it's very positive, too.
Well, let's talk a little bit about some of your names, because some of these were interesting. Now, you had said some of these stocks are on the, quote, brink of extinction. The first one of these was Playboy Enterprises. Why don't you like Playboy?
Well, it's not that I don't like Playboy. It's just that there's some technology out there or some changing consumer taste. In the case of Playboy, technology out there, we call it the Napster effect, where you can actually go on the Internet and find the product or the offering at a lower price, or perhaps in many cases for free.
Now, what about another name here that you mentioned was McDonald's? And is that something, I mean, is that because of the Atkins diet? We're seeing people go away from fatty foods, and why not be positive on that name?
Changing consumer tastes. People, after decades of hamburgers and French fries, are leaning more towards more healthier foods offered at other chains and establishments. And I don't know if McDonald's can shake the image of the fries and the hamburgers.
The fries and burgers,
right.
Now, just as a point of clarification, are you short either one of those names right now, or?
Those two, not right now.
Okay. All right. Well, let's move over to the positive side. There's a theme of all of these, seems to be a women's theme. Martech Biosciences, it's a breastfeeding implant company. Inamed, a breast implant company, and Allergen, which makes Botox. What is it about those names? I mean, Martech up 184% over the past year, Inamed up 147%. They have room to go higher?
I believe so. On the brink of continuing accelerating growth, Martech developed this microalgae nutritional oils that are very, very healthy, synthetic breast formula, actually, that it's got some pretty nice therapeutic effects. So that's healthy stuff.
And what about Inamed and Allergen?
Well, Inamed is kind of a consumer company that's crossed over a couple of areas of high demand, the breast implants, also the fatty belts, people getting their stomachs taken in, and also some skin treatment therapy.
Okay, and lastly, before we go, what is it that would make you more concerned about the market? You say you're still bullish. What is the one thing that would make you more cautious right now?
Well, outside of a geopolitical or terrorist event, valuations are getting close to their fair value. Decline in earnings, and also we're seeing a little bit of an expansion in margin buying, which is nowhere near the bubble area of a few years ago, but it's starting to pick up a little bit. So indicate higher levels in those areas would make us more bearish.
And anything on the interest rate front? Any concern there? If we see the Fed move rates higher, would that make you more cautious?
They would have to move quite a bit still. Everyone's anticipating 50 basis points by year end, but something higher there would be a shock.
Well, Robert Maltbie, Millennium Asset Management, thank you so much for being our guest today.
My pleasure, Erin.